President Trump will be nominating Kevin Warsh to be the next chair of the Federal Reserve to replace Jerome Powell in May. Okay, what does this mean for stocks, for crypto, for Bitcoin, and for gold and silver? This is a major shift in leadership that every investor needs to understand. What I'm about to present to you today has not been presented to you by the media, at least not to my knowledge. And if you're an investor, you're going to want to hear this. We are going deep into the numbers today. In today's video, I want to do two things. First, I want to break down Warsh's monetary policy. Second, I want to explain how Warsh's monetary policy is going to affect your personal investments. Okay, we need to start here to give you some context. So who exactly is Kevin Warsh? I'm going to give you some highlights. Kevin Warsh is not an outsider to the Federal Reserve System. He served as a Fed governor from 2006 to 2011, putting him at the heart of the 2008 crisis. He worked directly on crisis-era policy, bank rescues, liquidity programs, and early QE. After leaving the Fed, Warsh became a big critic of the constant money printing. The big takeaway is that Warsh is proposing going a completely different direction. He's talking about reforming the Fed in a way that differs significantly from Jerome Powell. What do you know about Kevin Warsh? What is he proposing? What's he really saying? You've probably read a headline or an article suggesting he wants to cut interest rates, and you might have heard he wants to focus on quantitative tightening or QT. But now I'm going to tell you what Warsh is really proposing and how this affects your money. Jerome Powell's strategy is to prevent a crisis by steadily printing money month after month. They want to keep things smooth and predictable, even if it means constant inflation. In December 2025, the Fed started printing $40 billion a month to buy U.S. Treasury bills. They did this because the financial plumbing started to show signs of distress and lack of liquidity. The pro, no emergency. The con, constant elevated inflation that eats away at your savings. Warsh wants to stop the constant printing. He says, let there be an emergency if one is coming. Only then should the Fed come to the rescue with a flood of liquidity. It's a binary choice. Do you prefer Powell's steady printing or Warsh's wait for the fire and flooded approach? I'm going to share my thoughts, but first let's look at Warsh in 2008 when he was at the Fed. He supported a historic doubling of the balance sheet. Why? The interviewer asked just that. The Fed responded with drama, doubling the supply of reserves in just one quarter. Warsh's reaction is telling. He knows the weight of those decisions made in the heat of '08. Why support that dramatic infusion of money? Why flood the markets so aggressively? Watch this closely. Warsh says central banks are for panics, and the response? Overwhelming force. A panic is when markets aren't working. The job of the Fed is to show up with money. Not to set prices, but to make sure buyers and sellers can clear. We were the backstop. If we blew it, it would have been worse for the rest of the world. That's why we acted. We recognized the panic and showed overwhelming force. It was an emergency situation. Which path is actually better for you, steady printing or lumpy, aggressive rescue printing? In my view, the outcome is identical. More money printing and ongoing devaluation of your dollar. It's like getting paid once or twice a month. The total at the end of the year stays the same. But most people want it twice a month to avoid that stressful paycheck to paycheck gap. Warsh's plan introduces massive stress points. Stocks, crypto, and gold will feel that gap. Volatility will skyrocket because the Fed won't be there to catch every minor fall. Warsh isn't fixing the system. He's just changing the calendar. The printing still happens. Short term, I expect extreme volatility as the Fed put becomes less predictable. Markets hate uncertainty. Warsh is the definition of a regime change of uncertainty. Medium term, watch for a rotation. Speculative growth out, value and cash flow in. This is very bad for Bitcoin. It trades like an amplified tech stock and needs liquidity. Warsh could be the worst Fed chair Bitcoin has ever seen if he pulls that liquidity. Precious metals will be fine long term. De-dollarization is still the main trend. But let's be real, talk is cheap. We might get a bait and switch from Warsh. Would Trump really nominate a guy who crashes the market right before midterms? Trump wants the markets to run hot. He wants growth. He wants to win the elections. I believe they will run the economy hot. The money printing will continue unabated. Inflation, devaluation, de-dollarization, all the same. Only the face changes. So don't be fooled by the hawkish talk. The system requires the printing to continue. Look at him. He knows how to play the game. He's been in the room before. The pressure to print will be immense from both sides of the political aisle. Warsh says he's a reformer, but the math of the U.S. debt doesn't allow for reform. The interaction between policy and political reality is where the rubber meets the road, and that road always leads back to more liquidity being injected into the system. Expect the unexpected, but prepare for the inevitable, more dollar devaluation. He talks about overwhelming force because that's the only tool the Fed actually has left. When the next panic hits, and it will, you'll see just how fast the printing starts again. So stay focused on your long-term goals and don't get shaken out by the short-term noise. Stocks will be lumpy, crypto will be stressed, but the total result, more inflation. If you want my specific investment moves, check the link for my Patreon below. Thank you for watching. Subscribe for more deep dives. Have a very nice day. Take care. Thank you again. See you in the next one. Take care.